Hi everyone, this is KT here. So today's video is about the trade being placed on December 1 to December 5, 2025. So let's take a look at what trades are being placed and what are the intention for doing so. So we first look at the dashboard on the 7 days return here. So apparently it's about 10% this week versus the S&P plus 2.21%. So as you can see, slowly we are grinding back to recover our losses here. So let's take a look at the positions. Okay, so I would say for AMD here, most of my positions simply expired. So my puts that were bought to hedge has already expired, and the rest I also closed out quietly. So here my intention was quite straightforward, is to just to let the theta do the work because this is a sold put expiring in February. So as days pass by, I will have a theta decay and I will slowly get back the premium here. So just letting it to decay naturally and selectively buying puts to hedge the risk. So basically just a disciplined move. Every week or so, I would just put in hedges for AMD just in case that AMD tank. But next week is the Fed's decision on rate cut or not. So probably I'll play some puts next week for AMD in case there isn't a rate cut and the market will tank or will go into a bearish price action here. Well, if it's a bullish price action, AMD will probably be also having a bullish price action. So I wouldn't be much bothered about hedging AMD here. Okay. Next, we talk about CRM here. This week was the most active stock ticker for me. I had expirations for CRM options position. I have assignments, and I have buying of CRM shares, and also selling new calls, opening puts, and also buying back the cost. So basically, I did a lot of moves on CRM. So the intention here for this week was to manage assignment for CRM, reshape the cover call exposure and reset CRM into a cleaner expiration. So I treated the volatility of CRM as an opportunity to tighten the structure and continue the premium cycle. Why CRM is very volatile this week? Because of its earnings release. It actually beats expectation for CRM. So it is having a bullish price action. And furthermore, with the rate cut next week, it will actually propel CRM into a higher strike price. So next week, I'll probably be monitoring CRM's strike price and to see whether I want to uh, increase or move the CRM strike price to a 290 or 300 instead and further up, just to avoid the spike here. And of course, if there's more time for it to recover back, I can also bring it back from a higher strike price to a lower strike price here. So this just shows that this week I was quite proactive in managing my positions and not being reactive. Uh, so it's just structured repositioning and a disciplined whale style management at scale here. Next, we talk about CRWV. I unwound some old calls and re-establish new ones here. So CRWV here, actually it was supposed to be 85 calls to expire on December 5, but CRWV starts to have a bullish price action, so I had no choice but to preempt this bullish price action and to increase the strike price to 100 here at a later expiration date here. So it's just very simple to clean up the options position here, remove the outdated gamma pockets, and put on more efficient core exposure. Just also reducing some noise and consolidating the risk and making it more manageable here. I still have a Lotto at 280. So if it moons for CRWV, I will probably gain some profit here on this Lotto. Next, GLD, nothing much, just selling puts and buying puts, just a rebalance of the position. The intention is to maintain a long duration downside protection while also avoiding a near-term theta bleed here. Just a consistent hedge maintenance, and also because just rolling 1 week forward, again, net me some positive gains here. So GLD is just to ensure the portfolio stays convex and protected here. Okay, I'm also positioned that because now GLD is about 385 to 390. I'm positioned that if in case the next Fed rate cut decision is hawkish, where GLD will be affected and it will tank, I have a lower strike price to tank the moves here. Okay. And if GLD moons, if it's a dovish Fed reaction, then I would start to roll up the strike price. Next, JD here is a classic whale cycle in motion here. I had assignments, I sold off shares, I reopened puts, I even pick up inventory at certain points here. But my intention is just to manage assignment responsibly and adjust my share exposure and immediately restart the income engine by selling puts again. So just keep on rolling and to prevent it being assigned and just showing some strong mechanical discipline, just running the wheel here. So I continue to run the wheel here until that JD starts to have a bullish price action and starts to moon. And then that's where I reap my profits. Pfizer here, um, nothing much. I rotated some covered calls, some expired, bought it back, and new ones were sold here. So the intention was just steady income generation and keeping my core exposure fresh. I think Pfizer is having a bullish price action, so I'm pretty much positioned for a bullish price action after the Fed's cut, and that's why I have a 28 expiring at Gen 9 and a 27 also expiring at Gen 9. So let's see how Pfizer will behave. Just a consistent patient premium selling on a stable stock here. Nothing aggressive, just disciplined income rotation. As you can see, there's no NBIS here because NBIS just simply expired, and I would not touch NBIS again. Yeah, because it's a very growth stock, and a growth stock in my portfolio is CRWV. So after CRWV has expired for this short calls, I'm also not going to touch CRWV here. Okay, next, left with Poyet here. Poyet was quite active this week. Sold puts, bought back puts because it came from $4 plus to now $6 plus. I expecting that it will go up to maybe $7 or $8 and even maybe $10 or $12 in the future. So I wrote my Poyet puts forward, reopen new ones. So my intention was just to reset the short put exposure across expirations, different expirations while keeping the same directional thesis, which is a bullish thesis here. So calendar rolling here, theta resetting and managing downside windows. Behaviorally, I'm comfortable with the ticker, but a structured style of management here. Frequent adjustment, but not emotional here. Next, SoFi position expired quietly. My hedge actually expired. Intention was a simple low touch theta play here. I just monitor SoFi because SoFi has diluted shares here. So that's why it's a downward bearish momentum or price action for SoFi. I'll see whether it's stable and then to see whether I need to roll $22 downwards at a further expiration date here. Next, STZ have a bullish price action here. So and some of the position expired. So it's more about the short calls and selling calls, buying them back and rolling them out. My intention was just a covered call income while reducing upside risk and keeping my call service aligned with the price action. Quite a textbook defensive play here and an income focused management. I am thinking SEZ might still have a bearish price, a bullish price action here, but currently it's down around 142, 143, I had 150. If it goes up to 145, I need to roll the 150 up to 160. My break-even price is 160. I can still get some puts being sold for STZ just to have some dollar cost averaging here. Next, VIX is just a hedge here for complexity, and VIX has actually decreased down to about 14 to 15, which means market is pretty much bullish. Probably you'll need to buy more VIX here for the January month or February month here. Okay. So overall, among all the trades here, there are quite a number of patterns here. Number one pattern is discipline. I let many positions expire and intervene only when necessary. Number two is a proactive structure, like example, my CRM, JD, Poet, and STZ all show deliberate repositioning and not reacting. Number three is risk awareness because I have GLD hedges, JD inventory control, CRM call adjustments, all show active risk governance here. And number four, consistency in the philosophy. I stuck to my premium first approach with no style drift. So actually, this whole week is a week of structured, intentional portfolio management, balancing the decay and also managing assignment and scaling exposure with control. So I think that's all for today. So remember to like this YouTube video and subscribe to this YouTube channel and also turn on your notification bell. So leave a comment and also have a great day, everyone. Signing off here. See you in the next one.